So if you clicked on this video, you're probably lost and don't know where to start in trading. So here am I. I'm some random 14-year-old that just want to help you out. So what is trading? So trading is the process whereby you determine where price will go depending on your fundamental or technical analysis. So to know this and to understand this, you need to know that there are three technical bases. You need to know a strategy, a risk management, and the psychology. And the psychology is probably the most important one, so stay till the end. So what is a strategy? So a strategy is basically the analysis you make on your chart to determine if price is going to go up or down or sideways. So let's say you're on the gold market, right? And you see that gold is moving pretty high, right? And it's moving toward the supply zone. And this supply zone has a lot of bearish momentum. So you think that price is going to be bearish, and it's not. So you just wait, and you're very lost in your head. So being lost in your head is probably the something called analysis paralysis, which you need to be careful of, and that goes with psychology. So yeah, a strategy is basically the analysis you make. There are a lot of ones. There's ICT, SMC, CRT, and all of these. So now the second thing, I'm going to be talking more about strategy in the end, but I want to get to the psychology because it's important. So risk management. So risk management is basically how much you're going to risk per trade depending on your account. So I use the 1% rule, which is basically risk 1% of your account per trade. So let's say you're on the NASDAQ and you open a trade, and out of these $1,000, you're going to risk only 1%. So 1% of $1,000 is $10. So yeah, um, let's say you open a trade and it's a 1 to 2 risk to reward. What is risk to reward? So for example, if I use a 1 to 2, which means that I'm going to risk 1 to make 2, which is the double. So I risk $10 to make 20. And the beautiful part about this is that when you actually do this on the long term, you're going to be very profitable. So let's say I take 10 trades, right? So I take 10 trades, and since let's say my win rate is 50%, I'm going to win 5 trades, right? And I'll lose the other 5. So out of this information, you can tell that if I won 5 trades and lost 5, means that I made 5 times 2, because that's what I made, which is 2%. So 5 times 2 is 10% minus what I lost, which is 5%, because I lost 5 trades and won 5 trades. So 10 minus 5 is 5% per month, for example. That's a very equilibrated, I don't think that's a word, but yeah. um, yeah, so that's basically on the long term. uh, the risk management is probably one of the best things that you should know and master. And in the end, we have the psychology. So what is psychology? Psychology, oh man, okay. So psychology is basically acquiring experience through all the hardships you don't go through when you start trading, but you can still acquire it by me helping you. So the main thing that all the beginner traders make is that they try to get rich overnight. So let me tell you something. Trading is a skill that if you learn it, that it's gonna last forever. So you can't just learn it in a night when it took people years, and some people months, but yeah, it took years people to master it. What makes you think that you're the only one that's gonna make it overnight? It's and yeah, ego in trading is probably the worst thing and the thing that's gonna make you lose a lot of money. And yeah, um, about that, when you trade and master your psychology, when you, for example, when you try just to take trades just to make money, which is the worst goal you can have, you're gonna know that. And actually, when you take trades like that, it's always gonna lose. So what I like to make and to think about is that when I actually trade, I analyze the things objectively and clearly. So yeah. So for example, I don't involve my feelings inside the trade. I just trade what I see, not what I hope. That's one of my quotes, but yeah, I have it on my Instagram bio. But yeah, so what I mean by trading what I see and not what I hope is that what I see on the market has nothing to do with me, because the market no doesn't care at all about your feelings. So basically, when you trade and see the market, oh, it made a big move up, I'm gonna buy. So yeah, so that's something called FOMO, which is fear of missing out. And it's basically it's like an impulse in your head that's like, oh my god, you should buy, it's going up. You don't know if it's gonna continue to go up or not. So, and depending on your strategy, maybe the strategy needs a big move up and you could buy, but that's probably like not the case. So yeah, don't do it. So your strategy talks about a high, a pullback. So when the price makes a big move up, then waits for this retrace to the downside, and there you enter the trade, for example. So know that in trading, patience will always be rewarded. So when you actually wait for that move to happen, that big move up and that pullback, so the market rebalances, that patience is gonna make you like take the best trades you're ever gonna think about. You're not even gonna think about them. And the people that just chase the move, and they chase the move and don't even get the time to exactly put the stop loss where it needs to be and the take profit where it needs to be, that ruins their RR completely. So the problem with when you enter late just because you wanted that move, um, okay guys, I'm having a problem because when I record this video, I'm kind of nervous. So just like let me, thank you. Um, yeah, what was I saying? Yeah, that when these people actually enter late, their RR completely like fails. So because when you put your take profit and your stop loss where it actually needed to be, it lowers your RR. So let's say you entered here instead of here. So the pullback was here, and then you entered here. So now your stop loss needs to be below this low, and now your take profit is gonna be above. I mean, like at the high. And the problem with that is it's gonna be like 1-to-1 RR. So that not only breaks your rules, but also breaks your risk management, right? And that's a very big problem, and that's actually like ruins your consistency. So consistency in trading is probably the most important factor also in trading. If you're not consistent, then long term you're unprofitable, so it's actually pretty fucking useless. Another thing is that yeah, also I'll be displaying something on the chart so we can like you guys can see how I'm using all these factors to trade and know what the actual fuck I'm doing. I'm sorry for swearing, mom, if you're seeing this video, but yeah. Yeah, that's you know what. Let's get to the charts, boys. We're on the charts. Okay, wait. Don't freak out. Okay, hear me out. So look, the white candles. Each of these pieces are called candlesticks, right? Like this piece here is called candlestick. This piece is called candlestick. Like each one of these candles. Okay, so the numbers here on the top left, so 1 3 5, so and 1M 3M 5M, so these are the minutes and like the time frames. So these determine like if you go on the 15-minute, for example, every single one of these pieces of these candlesticks are formed within 15 minutes. So here, for example, this candlestick right here that's forming right now, it's started at 2:30, and now it's 2:36, and it has still like 8 minutes. Yeah, that's all you need to know. So for example, according to my strategy, only a few of you guys will understand. I'm sorry, I'm very sorry. So according to my strategy, I wait for 9:30 open, which is like around yeah, this time. Yeah, and with like when this, okay, yeah, so what happens after this session opens is basically when I trade. So today I didn't trade because I was at school and I just couldn't focus, but I could take this trade. So how do I implement these things that I get, how do I implement these things that I just taught you guys? So first of all, do I respect my strategy? So I'm not gonna add any more topics, any more topics in my strategy. I'm not gonna break or I'm not gonna over leverage. I'm not gonna risk more than I should, and I'm not gonna force anything. So all the things that I see are the things that I'm gonna be trading with. So here, my strategy consists in ICD concepts, which you can see right now. So yeah, just after this time, yeah. So I'm gonna be trading only like price action that's going into here. So I'm also gonna be using this to determine if price is going like up or down recently. So here, we're going down, so we're gonna look for sells. So today was a great trading day, not gonna lie. So okay, we had this 5 minutes. We call it fair value gaps, which is basically a space between three candles. Okay, so you have three consecutive candles, like 1, 2, and 3, and the gap between the first one and the third one forms a fair value gap, as you can see here. Right? That's what a fair value gap is. So yeah, I use a fair value gap, and when I see it getting like tapped or getting some liquidity, okay, yeah, what I had a video explained on my Instagram what is liquidity, so you can check it out. So liquidity is basically highs or lows. So you have this high, and there's like liquidity is resting above it, and a low liquidity is resting below a high. What? Okay, wait a sec. So above highs we have liquidity, and below lows we have liquidity. That's it. Okay. So what happens at these levels? So here we have liquidity above this high, right? And as you can see, just as we opened here at 9:30, we manipulated this shit. So look, now my strategy just needs one more confirmation at an inverse fair value gap that happened from this leg, like from this around there. Yeah, so look here, for example, we had this IFEG, and what we should do is that here we have this inverse fair value gap. We just inversed this gap. Looks so good. And like as soon as we close below it, so like around there, we open our trade. We always put our stop loss above the manipulation. And what do we target? Previous session highs, previous session lows, previous daily lows, and all that kind of thing. Yeah, so here, for example, I'm going to target, I don't know, this low, for example. Look, looks so beautiful. Look at this low here. So yeah, with this low, my RO would be like crazy. 1 to 2.5, see? And then trade would be smashed. But the problem, I was in school. So yeah. But yeah, today was a great trading day, and just didn't trade because I was in school and shit. But yeah, so that's basically it, guys. So what I did right here is, look, I followed my strategy, which was liquidity sweep inside the fair value gap, then an inverse fair value gap from the manipulation like we had inside the FEG. I didn't overcomplicate it and shit. And the risk management, so obviously I didn't trade, but I personally risk 50% per $50 per trade because I'm on a funded account. And my psychology, as you guys can see, I analyzed like this objectively. I just said all the things that happened in the chart, and yeah, that's basically it. So if you have any questions, just comment. I mean, I'm always gonna be replying, guys. I honestly love you guys. So yeah, thank you for watching.